Good morning.
Good morning.
On Wednesday, June 6th, the Small Business Committee held an oversight hearing with SBA Administrator Karen Mills to question this administration about its procedures for setting policy for its financial assistance programs. The committee also examined SBA's procedures for lending oversight to make sure that SBA is protecting taxpayers by conducting proper oversight of its lending partners. Today, we are here to follow up on that hearing. Testifying today are private sector lending partners who will discuss the effect of SBA policy on loan processing and how SBA can be a better partner. In addition to reviewing SBA policy and procedures, we will also hear about how other financial regulators are impacting credit availability for small businesses. The committee consistently hears from both bankers and small businesses that the regulatory environment is harming economic growth. This is an opportunity to hear more about the regulatory burdens on banks. We all know that economic growth will be led by small businesses. To encourage this important sector to grow and create jobs, we need an environment where small businesses can access capital, and banks have the freedom to lend without consistent second-guessing by regulators. I would like to thank our witnesses for taking time away from their businesses to testify here today. If subcommittee members have an opening statement prepared, I ask them to have it submitted for the record. I'd like to take a moment to explain the timing lights for you. You will each have 5 minutes to deliver your remarks. The light will start out as green. When you have 1 minute remaining, the light will turn yellow. Finally, at the end of your 5 minutes, it will turn red. I ask you to adhere to the time limit. Our first witness is David Rader. Is it Rader or Rader? Rader, okay. Head of Small Business Lending for Wells Fargo. Wells Fargo is SBA's top lender by dollars lent to small business and second in the number of loans. So far in fiscal year 2012, Wells Fargo has already made over $500 million in loans to small businesses through the SBA's 7A loan program. David has been with Wells Fargo for 29 years. David, thank you for being here, and we look forward to your testimony.
Mr. Chairman, Ranking Member Schrader, and members of the subcommittee. My name is David Rader, and for the past 5 years, I have been the business executive of Wells Fargo's SBA lending business. I've been employed at Wells Fargo for 29 years. Thank you for inviting me here today. Wells Fargo, as the Chairman said, is the national SBA lender that offers all core 7A as well as the 504 loan products. We have over 350 dedicated SBA team members, and we are a growing and profitable business for the bank, holding loan balances of $7 billion. As the Chairman said, for the past 3 years, Wells Fargo has been the #1 7A dollar lender, approving more than $1.2 billion in 7A loans, representing 3,142 loans. And we also made history by becoming the first institution to generate over $1 billion of 7A loans in the program. Our lending trend continues today, and through May, Wells Fargo remains the #1 7A lender, approving $734 million, and we currently are the #2 unit lender. These dollars represent significant numbers of both large and small loans. We believe that the flow of new dollars into our communities represents a very powerful statement for job creation and economic development. We want to lend more dollars to more creditworthy customers, and we believe the SBA agency is aligned with Wells Fargo to achieve that goal. As the nation's #1 SBA lender, we appreciate the very constructive engagement of the SBA and the interest it has in our lending perspectives. We regularly participate with the SBA in an ongoing dialogue on credit policy issues, oversight, and program enhancements. We also believe there are opportunities to improve the programs and streamline the very complex SOPs. The agency's efforts to reduce regulation and process over the years, especially the SOPs, are welcome. In Wells Fargo's view, the SOPs can be simplified and clarified for the benefit of all without added risk to the taxpayer. For example, the published September 2011 SOPs lack clarity surrounding stock ownership rules and EPC OC structure rules. As a result, many industry lenders sought standard processing approval rather than PLP approval, resulting in customer delays and added processing expense for all. When SOPs are made, the agency must provide the industry with enough lead time to educate, train, and develop internal risk systems so we are equipped to best serve our customers and make loans with enforceable guarantees. We believe there can be much more transparency in the SOP vetting process, both with the SBA and the lending industry at large, as well as with the SBA and the OIG. From our vantage point, the OIG continues to be too deeply involved in the vetting process. We find the process unclear, and we are often surprised at the outcome, hampering our ability to react and train our teams effectively. We suggest that the SBA give lenders an opportunity to change the SOPs and give us time, at least 30 days, prior to any final release. We also recommend that the agency revise current SOPs. For example, eliminate the requirement for blue ink signatures on necessary SBA forms. Number 2, allow individuals, when there is a change of ownership transaction involving a stock purchase, rather than just an asset purchase. Number 3, allow 7A loans under $350,000 to be approved, processed under the SBA Express program using lenders' delegated authority. Those are just a few suggestions. Wells Fargo continues to urge the SBA to focus its resources on streamlining existing programs, both 7A and 504, rather than creating brand new programs that serve limited niches. The recently revised Capline program is a great example of SBA's progress in this regard. Wells Fargo welcomes practical and prudent lender oversight. Strong lender oversight will level the playing field and make the programs more consistent, cost-effective, and easier to use. We view the SBA on-site review process as rigorous and an opportunity for us to improve. We take pride in our substantial compliance with SBA regulations. We welcome the recent appointment of the OCRM director and look forward to a new era of transparency and collaboration. OCRM's willingness to discuss key portfolio monitoring tools are a welcome change that we appreciate. There is much work to do if we work together and share best practices. Wells Fargo continues to be optimistic about our ability to help businesses succeed financially while being good stewards of the SBA program. We look forward to our ongoing dialogue and partnership with the SBA, and I would be happy to answer any questions. Thank you.
Great. Thank you for your testimony. Our next witness is Brett Martinez, President and CEO of Redwood Credit Union located in Santa Rosa, California. Brett is testifying on behalf of the Credit Union National Association, where he serves on their board of directors. In his 25 years of banking experience, Mr. Martinez served as a senior executive with the California Credit Union League, with a large Southern California credit union prior to joining Redwood in 2002. Mr. Martinez, thank you for being here, and we look forward to your testimony.
Thank you. Chairman Kaufman, Ranking Member Schrader, and members of the subcommittee, thank you for the opportunity to testify at today's hearing. Again, my name is Brett Martinez. My name is Brett Martinez, and I'm President and CEO of Redwood Credit Union, a $2 billion state-chartered credit union serving 220,000 members located in Santa Rosa, California. Redwood is the largest credit union SBA lender in the country by loan volume. Credit unions share the Small Business Committee's goal of increasing access to credit for small businesses through the reduction of statutory and regulatory impediments. At the end of the year, there were over 330 credit union SBA lenders. These credit unions collectively have $800 million in SBA loans outstanding. The average credit union SBA loan is roughly $100,000. Since December 2007, SBA loans have grown by 90% at credit unions throughout the nation. SBA guaranteed loans are important to borrowers who otherwise would not be able to get a conventional loan, but they are complicated to make. They require staff with a special kind of expertise. They cost the borrower and their lender more to make than conventional loans, and they take longer to complete. My written testimony describes how we have been able to use SBA loan programs to help small businesses in our community. We find ourselves in a fragile economic recovery. Small businesses that have survived the recession have largely done so by right-sizing their business and following a path of declining profits. Many have shown losses for several years. As a result of their ongoing restructuring, they are beginning to once again show profits. Ultimately, they are left with a need to restructure their balance sheets, consolidate debt, and free up cash flow to grow their business. We have used SBA programs, including the 504 refinance program and the first mortgage lien pooling program, to help our members stay in business, preserve jobs, and survive through the economic recovery. These programs expire in September, and we encourage Congress to reauthorize them. Otherwise, small businesses will be adversely impacted. My written testimony describes efforts that CUNA has taken to encourage SBA to improve its programs through reduced regulatory burden, increased transparency, and a streamlined application program. In general, we have seen improvements in this area over the last several years. However, other lenders who do not have the experience that we do still may find the process very complicated. To that end, is it important for SBA to continue its efforts in this regard and continue to engage lenders when it modifies SOPs and other policies. Enhancing access to credit for small businesses is an important part of promoting job creation and the economic recovery. There is a significant demand for credit from small businesses. During the financial crisis, credit unions expanded business lending to their members while other lenders pulled back. Many credit unions that contributed to the vast majority of this growth are now becoming severely constrained by the statutory cap on credit union business lending. Redwood is one of these credit unions. We are at 75% of our capacity, and we will only be able to lend to business members for the next 18 months. The cap will not only affect our ability to offer conventional loans, but also our ability to offer SBA loans. That is why we are strongly encouraging Congress to increase the statutory cap on credit union business lending. Representatives Ed Royce and Carolyn McCarthy have introduced legislation to allow experienced credit unions operating near the cap to apply to NCUA for authority to lend beyond that cap. We estimate that the Royce-McCarthy legislation would inject $13 billion into new capital into small businesses in the first year after enactment and create 140,000 new jobs, all at no cost to taxpayers. We appreciate the several members of the subcommittee that have co-sponsored the legislation. Some banking trades strongly oppose the Royce-McCarthy bill. They suggest it's unnecessary because the guaranteed portion of an SBA loan does not count against the cap. However, SBA is not a solution to the cap limitations. Notwithstanding their merits, SBA loans clearly are not a substitute for conventional business loans. At the same time, increasing the cap on credit union business lending would almost certainly lead to an increase in SBA guaranteed lending. Some small businesses, both that qualify for a conventional loan and those that require a government guarantee, would have more access to credit to start growing their business and create jobs. We encourage Congress to enact the Royce-McCarthy legislation. Thank you again for the opportunity to testify today, and I'm happy to answer any questions.
Tony. Our next witness is Timothy Dixon, Senior Vice President and Head of SBA Lending at Citizens Republic Bancorp. Citizens serves customers in Michigan, Ohio, and Wisconsin. Tim has close to 30 years of commercial banking experience, serving as Executive Vice President of Commercial Banking at Skybank before joining Citizens Republic. Tim is testifying on behalf of the Consumer Bankers Association. Tim, thank you for being here today. And you have 5 minutes to present your testimony.
Chairman Kaufman, Ranking Member Schrader, and members of the subcommittee, my name is Tim Dixon, and I am Senior Vice President and Head of Small Business Administration Lending for Citizens Bank. Citizens Bank serves communities located within Michigan, Ohio, and Wisconsin with 219 branches and 249 ATMs. We're a community-oriented institution, with the majority of our revenue being derived from our core bank, which is heavily oriented towards small business. Citizens is a preferred SBA lender with dedicated specialists to fast-track the process, and we also have expertise in other state and local loan programs. While we utilize a number of the SBA loan programs across the bank, the majority of our loan volume is S7A Express with an average loan size of $60,000. I'm also a member of the Consumer Bankers Association's Small Business Banking Committee, which includes the top business bankers in the country who share the common goal of helping small businesses meet their financial needs. Headlines highlighting weak consumer confidence and high unemployment have created a great level of uncertainty for small business owners. Many business owners are cautious to take on additional debt or to hire new employees with a current level of economic uncertainty. Continued reports of a possible double-dip recession only further the concerns of business owners and the confidence of American consumers. SBA lending has played an important role in helping small business owners meet their financial needs in difficult times. While SBA lending remained strong in the first half of 2012, overall numbers appear to be lower than those of 2011, a banner year for SBA. Much of the difference can be attributed to the expiration of loan enhancements provided under the Small Business Jobs Act. Short of reinstating these temporary provisions, today's hearing is an opportunity to highlight positives and identify ways to improve the SBA programs. CBA's Small Business Banking Committee compiled a list of recommendations focused on the SBA 7A and 504 programs and sent them in a recent letter to the SBA and Congress, highlighting our suggestions to improve the efficiency and effectiveness of these valuable programs. The SBA incorporated a couple of our recommendations in its most recent revision of its Standard Operating Procedures, or SOP. However, CBA believes there are still a number of changes the SBA can make to help increase lending. As detailed in our written testimony, the Consumer Bankers Association suggests a number of enhancements to the 7A and 504 programs. Most notably, we suggest a streamlined 7A process by allowing preferred lenders to use express loan forms and processes for all 7A loans. For 504 loans, we encourage the reauthorization of the refinance program, which is currently scheduled to sunset in September. The SOP is a complicated document, and while having the ability to make slight tweaks can be beneficial at times, quick and frequent changes to the SOP process can create real-world challenges. As the terms of the SOP are ever-changing, it creates practical challenges to interpret revisions, train staff, update systems, and be in compliance if these changes are coming too frequently. The ability of an institution to keep up with changes to the SOP can have large compliance cost implications, which can adversely affect lending. Furthermore, the clarification of SOP terms can be time-consuming and difficult. For example, the improvements to the Capline program issued in late 2011 did not provide clear terms for loan qualification. In response to industry inquiries, the SBA took over 6 months to provide adequate clarification. And so we recommend a more methodical and consistent approach to SOP policy changes. Finally, effective SBA lender oversight is another area of concern. Members of the CBA have found that the SBA audit process can be a very time-consuming exercise and is not always useful to assess and mitigate risk. A more transparent and streamlined audit process would go a long way in improving lender efficiency. Lender oversight should be a means for the agency to identify variances from established lender benchmarks and provide a reasonable process for lenders to remedy deficiencies. We applaud this committee's continued efforts to improve the efficiency and effectiveness of the SBA programs. I thank you for the opportunity to appear here today, and I'd be happy to answer any questions you may have.
Thank you for your testimony. Robert Marquette is President and CEO of Members First federal credit union located in Pennsylvania. Members First Credit Union has over 200,000 members. Robert is testifying on behalf of the National Association of Federal Credit Unions, where he serves as on their board of directors. Mr. Marquette, you have 5 minutes to present your testimony.
Good morning, Chairman Kaufman, Ranking Member Schrader, and members of the subcommittee. My name is Bob Marquette, President and CEO of Members First Federal Credit Union, and I am testifying today on behalf of NAFCU. Thank you for holding this important hearing. I appreciate the opportunity to share our views on small business lending from a lender's perspective. Credit unions currently operate under an arbitrary business lending cap of 12.25% of total assets. This artificial cap acts as a barrier to credit unions meeting the needs of their small business members. It should be noted that the government-guaranteed portions of SBA loans do not count towards the member business lending cap, but the non-guaranteed portions do. This could cause a credit union to scale back participation in SBA programs as they approach the arbitrary cap. A 2011 SBA study indicates that credit union business lending increased before and during the financial crisis while banks decreased. This demonstrates that credit unions continue to meet the capital needs of their business members even during the most difficult of times. In addition, the study found that bank business lending was largely unaffected by changes in the credit union's business lending. We urge subcommittee members to support the bipartisan legislation H.R. 1418, the Small Business Lending Enhancement Act, which addresses the arbitrary business lending cap. Our nation's Main Street businesses also recognize that the artificial cap hurts job creation and their access to capital. Like us, they support and urge passage of H.R. 4293, the Restore Main Street's Credit Act of 2012, introduced by Subcommittee Ranking Member Kurt Schrader. At Members First, we launched our member business lending program in January of 2003, but are unfortunately approaching our arbitrary cap today. Our average member business loan is $185,000, while the median size is only $60,000. We estimate that Members First business loans created 52 new jobs in our area and helped save 269 more in 2011. At Members First, we entered the SBA 7A program in late 2010 and have originated 2 7A loans. We have also participated in this SBA 504 program for a longer period and have originated 3 loans in that program. Both 7A loans were for existing firms that were expanding and provided additional capital. However, both loans took nearly a year to fund. The SBA 7A process was time-consuming and burdensome. It left us with the impression that an established business lender, such as Members First, seeking to enter into the SBA marketplace is at the bottom of the SBA priority list. The multiple tiers within the SBA 7A program give larger lenders a competitive advantage over small institutions. Members First has stopped actively marketing our SBA 7A loans until we find a solution that can more efficiently meet our members' needs. Members First has had success using the SBA 504 loan program. That program and the USDA Business and Industry Loan Program have been well received by our members. Both programs treat all incoming applications equally, regardless of our history with the agency. NAFCU is pleased that SBA Administrator Karen Mills has been open to meeting with credit unions and hearing our concerns about SBA programs. We hope that this dialogue will continue and ultimately be productive in addressing our concerns. One way for the subcommittee to help address these concerns is to support H.R. 4191, the Credit Union Small Business Lending Act introduced by Subcommittee Ranking Member Kurt Schrader and Full Committee Member Representative Steve Chabot. This bipartisan bill would amend the Small Business Act to 1, direct the SBA Administrator to implement a program to increase credit union participation in the SBA Small Business Loan Program, 2, simplify the application process for such participants, and 3, provide a guarantee of up to 85% for loans made in underserved areas. These steps would make the process easier for credit unions to become more involved in SBA lending and open the door to more access to credit for those small businesses and communities served by them. In conclusion, we recognize that small businesses are the driving force of our economy and the key to its success. While the SBA lending programs are providing much-needed opportunities to businesses, there are still obstacles preventing them from reaching their full potential. That is why we, on behalf of our nation's credit unions, There are 94 million members, and our nation's small businesses urge the subcommittee to support legislation such as H.R. 1418, H.R. 4191, and H.R. 4293 to make it easier for credit unions to aid our nation's small businesses and create jobs. We thank you for your time and the opportunity to testify before you here today on this important issue to small businesses, credit unions, and our nation's economy. I would welcome any questions that you may have.
Thank you for your testimony. First question is for Mr. Rader and Mr. Dixon. I often hear from financial institutions that while entities in Washington encourage them to lend more, regulators on the ground are in fact requiring them to increase capital reserves. Have you experienced this, and if so, how has this decreased the amount of loans that you can make? Mr. Rader?
Chairman, our SBA lending business is providing capital to small businesses, and Wells Fargo has always been in a good position to provide that capital. So while we implore and applaud the SBA to reduce regulation and enhance and modify SOPs, we absolutely have not seen a decrease in our lending because of capital concerns at Wells Fargo.
Yes, Mr. Chairman, I think we have continued to see growth in our SBA loan portfolio. We don't feel constrained or feel that the regulatory burden is causing us difficulties in continuing to grow the portfolio and support small business.
Okay. A question to all the witnesses. Any of you, we can start with Mr. Marquette. Are small businesses confident, in your view, about their ability to access credit and grow their businesses at this time?
We've heard from small businesses in our area. They've seen some kind of a retrenching of business lending in our area for whatever purpose, for whatever reason, I'm not sure. We've seen a significant increase in the number of applications that we've received. But because of that business cap that we have, business lending cap that we have to be more selective. We have to operate within that cap, and we're about 90% of our cap right now. So they've seen some retrenchment. It's easing up a little bit. And credit unions have really stepped up to the plate in order to be that dependable source of business lending that our businesses need.
Mr. Dixon?
As we talk to business owners and look at the research, I think while there's been recovery in small business, business owners have learned something. They're cautious. They're keeping available credit in their hip pocket, if you will, for a rainy day. So I think some of the challenge with loan demand has been just small businesses not requiring as much credit. But where we have credit-worthy borrowers, we feel the markets are competitive, and the access to capital is there, particularly partnering with SBA.
Mr. Martinez?
We're seeing an improvement in that area. Just to give you an anecdote, Redwood Credit Union started SBA lending in 2008, and we immediately became the #1 SBA lender in our area. That wasn't because we were doing a significant amount of SBA loans. It was because we were continuing to lend. A lot of the local banks had pulled back. So we are seeing that start to improve. We are still the #1 SBA lender in our area, but improvement is there. Big impact over the past 4.5 years, though.
Mr. Rader?
Mr. Chairman, we are seeing better financial statements from our small business borrowers. We do believe their revenue trends and their profitability trends are increasing. We have in our business, in our SBA business right now, an increase in applications, an increase in new loan activity and submissions for credit. Our approval rates are higher this year than last year, and our approved pipelines, both in the 504 as well as 7A, are up. So we are encouraged by that activity, and we believe that we have the tools, especially with the new revised SOPs on the cap line program to provide larger working capital loans, that we will have the tools necessary to continue that slow improvement and progress on borrowing.
Okay. As you go through audits for both banking regulators in the case of credit unions, your regulators, and the SBA, do you feel that the two entities are working together, or are they just completely separate? Anybody would like to answer that?
I'll go ahead and start. I know NCUA is very supportive of SBA and has actually been talking to SBA and talking to Congress about their support there. So NCUA, credit union regulator, is very supportive.
Okay. Anyone else?
Our experience has been, that the SBA is listening, and we have a good working relationship, but we think there's work to be done in the audit and oversight area. And as we talk among the banks at CBA, we've made some specific recommendations to just improve the efficiency of that process.
Okay. Good. Mr. Martinez, according to your testimony, approximately 2,000 credit unions engage in business lending. Why so few? Roughly, I think, 300 offering SBA business loans products to their members.
Yes, those numbers are accurate. I know this hearing isn't about the business lending cap, but it is the #1 impediment for credit unions to get into both commercial lending and SBA lending. Those that are already in it are managing to a cap, and those that see the cap as a reason for them to not get into something that they're going to shut down is a reason that they're not getting into that.
Okay. This time we'll make some rounds to the members, and I think we'll hopefully have a second opportunity for rounds of questions. Ms. Hahn.
Thank you, Chairman. This is actually my first hearing as a member of this subcommittee, so I really want to thank you for holding this important hearing on the state of lending for our small businesses, and thanks to all the witnesses for being here today. You know, since I've been on the Small Business Committee, I've really made an effort to go out and talk to many, many small businesses personally, hundreds personally I've talked to, and wanted to find out, what is it? What do you need from us? Do we need to get out of the way, or do we need to get involved to make it better? And the #1 thing my small business told me that they needed was better access to capital. They needed more customers, #1, so they wanted the economy to improve. They want folks to have jobs so that they can be customers. But the second thing was they felt like if they could get access to capital, that they would expand, they would hire, and it really would be about job creation. One of the things I also heard was the burden of paperwork to fill out for an application for a small business loan. And I introduced the H.R. 3836, the Small Business Paperwork Reduction Act, which would reduce the amount of paperwork needed for a loan of, I think, $250,000 or under, from 12 pages to 2. Something simple that I think we can do to help folks, at least get through the process of application. Really pleased to see our credit union witnesses here today. I'm a big fan, as you know, of credit unions. I'm also a fan of Wells Fargo. I'm an equal opportunity borrower. I've borrowed from Wells Fargo, and I've borrowed from my local credit union. But I do think that you've made the case very clear, as you have in the past, about the lending cap. I'm a co-sponsor of the Small Business Lending Enhancement Act, which will raise the lending cap for credit unions. I believe that our credit unions really are there in the communities. They're like the community banks. They know their members. Many of them know them by name. They help them not only with the loan, but just with kind of overall counseling about becoming financially sound in their dealings. So I appreciate that, and I hope Congress will pass that. Mr. Rader, what I'm going to ask you is, one of the other things I heard from my small businesses was that sometimes the commercial banks will add a couple of requirements that the SBA does not require in their loans. For instance, collateral, real estate collateral. In other words, the Small Business Administration doesn't put that as a criteria to make the loan, but then sometimes the commercial banks will add that because your auditors would require that. Is there a way that we can reconcile that? Because I heard that over and over again, that what the Small Business Administration put on as a requirement, you all added to that and sometimes made that then the breaking point that small businesses were unable to comply with. Can we reconcile that?
Yeah, Congresswoman, I'd be happy to understand the details of your client situation. The SBA rules basically say that if a borrower does not have 100% collateral coverage in their real estate loan or in what they're purchasing, that we have to take all available collateral. That is an SOP rule. That is what we follow, and that is currently something that is a good lending practice, but also it hurts demand and the ability to provide loans for those customers who don't. So there is a delicate balance of making sure.
So you're not adding any.
The SBA programs and the rules of the SOP require that.
Okay. And let me go back to the credit unions. Either one of you can answer this. You've made it pretty clear on what you think we can do. So specifically, is there anything else that you see Congress doing that could increase the amount of loans that our credit unions can be making out there to our small businesses specifically?
I'll go ahead and start. Besides the cap, that's to keep people in, is make the entrance easier. It's a little daunting process. We were able, over the past 4.5 years, a lot of the banks in our area pulled back, so we were able to attract people that had significant experience, so it wasn't as daunting for us. But if you don't have that experience, it is a relatively daunting process to get involved. And then additional training. There's not a lot of people out there that are trained in this. You don't take internal staff and say, go be an SBA expert. It is very technical. So I would say those two things: make the process easier, reach out to credit unions, and provide additional training.
How are our local SBA regional administrators, how are they doing on the ground with all of you?
Our experience is they've been very accessible, want to be out in the communities, work with the banks, establish a dialogue. So I feel we've got a good working relationship with the 3 states we're within in the region. It's been a very positive experience.
And Chairwoman, I would echo that. Wells Fargo is a community bank. We have our SBA lending officers in most of the communities or big communities across the country. We have a very good relationship with the local district offices, with the SCORE program, as well as some of the most larger CDC organizations. So that's a big part of our outreach and an important part of the process.
Thank you. Mr. West of Florida.
Thank you, Mr. Chairman and Ranking Member. Thanks for the panel for being here today. A couple months ago, National Federation for Independent Businesses put out a survey that said about 8% of small businesses are looking to grow and expand. When you talk to these individuals, when you have them here in front of our hearings, 3 things: tax policy, regulatory environment, lack of access to capital. Last week in Palm Beach Gardens, we had Small Business Roundtable, Regions Bank. Once again, the exact same thing. And so there is a serious concern about the regulatory environment that is out there that is precluding the right type of lending. So the question that I have first is, how have you seen, if you have seen it at all, any type of effects from Dodd-Frank and what that's having on small business lending practices and procedures in your respective financial institutions?
Congressman, again, the SBA programs are primarily driven by the SOPs. So we are focused as an SBA lender on following those rules and suggesting good changes to those rules that prevent the barriers of entry for getting an SBA loan. So at this point, for our lending institution, the Dodd-Frank rules impact our larger bank, obviously, but again, we're focused on SBA and the SBA procedures.
But, one of the recurrent things you have, especially, I mean, Wells Fargo is a tad bit bigger than a lot of your small community banks, which is the lifeblood to small businesses. And what they are having a problem with, and that's why I'm trying to get an understanding of you all having the same problem, is examiners and regulators coming down based upon the rules of Dodd-Frank. This is above and beyond the rules of the SBA that are reclassifying good quality loans that you all have said are okay, and they're transferring that over to negative assets, and a lot of these financial institutions cannot carry that much negative asset. So that's my question. Are we seeing that, are you all seeing that type of trend as well?
On the credit union side, we are not. On the SBA, I agree with Mr. Rader. We're focused on SBA SOPs, but Dodd-Frank on the regular business side and consumer side, we're not seeing really much impact to that.
Okay. Then the next question I ask is, how often does the Small Business Administration come down and do reviews of your loan portfolios? And then also, how often do you have sharing of best practices with the SBA so that you have a voice in the streamlining of processes and procedures?
Our Wells Fargo SBA business routinely gets audited at least once a year. Our last audit, we got the final results in August of 2011. So we're most likely due soon for another on-site exam. We continually have dialogue with the SBA agency personnel in policy, in new product development. We wish we had a more transparent voice and transparency in understanding their vetting process, because we do have a lot of ideas to streamline programs and eliminate some of the inefficiencies that we see.
As we talk about the topic, Congressman, in CBA, the audit process depends on the type and size of institution, but our audits are every other year, and then there's a continued quarterly review of our loan portfolio. And, we think, as we pointed out in our testimony, that there are opportunities to make the process more efficient, more timely, and I think that'll be better for all of us.
How long is a normal turnaround on an audit report, on average?
We had our on-site audit last June 2011, and we received almost instantaneous feedback on what we were doing well. We did receive the official report in August of 2011.
Okay.
There is an exit conference after the on-site audit is completed, but in talking with members of the committee, till full closure could be out as far as 12 months. When you receive the final report and respond to the open questions and bring it to close, it could be that long.
Good or bad?
We think that's a little lengthy, and there's opportunities to compress that time frame working with SBA.
Thank you, Mr. Chairman. I yield back.
Thank you, Mr. West. Mr. Schrader, Oregon.
Thank you, Mr. Chairman. Appreciate the panels being here today. You guys are all star actors in the lending program as we try and get small businesses, medium-sized, and even large businesses back on their feet again. So I really appreciate all the work you're doing. Appreciate the comments by both Mr. Rader and Mr. Martinez that Dodd-Frank is not impacting small banks, community banks, or credit unions. That's not where it was intended to. We want to keep our attention on that, though. Sometimes our good folks in the agency sometimes have a tendency to extrapolate what it's supposed to be for the larger institutions. I think that might be what Mr. West was getting at. So if we can be of assistance in making sure you're not in the crosshairs of those that pose systemic risk. So appreciate that clarification. Having said that, curious about improvements. We're dealing with the small business side of things in this committee, and we've gotten a new administrator in the last few years. It would appear to most of us, I think, on the committee that things have turned for the better. Some of your testimony would seem to indicate that. So as we go through it, like your yes or no, it's gotten better, or no, it's still a little Byzantine process. Comment for Mr. Rader in particular, talking about the SBA being responsive. You list some things in your testimony. You mentioned a few. Has the SBA responded to those, and what do you think their tendency has been recently in terms of improved regulatory framework?
We are seeing a positive new era of transparency within the agency. So my vote would be yes, it is getting better. We have constantly talked to the agency officials about credit policy and process. We think we have a good dialogue there. However, we do not understand the vetting process. There needs to be more clarity there. And I believe the agency is intending on providing that, and we're making slow progress.
Good, good, good. I guess, Mr. Chair, I hope we kind of follow through on that to make sure that that is occurring and work with both the agency and the lenders out there. Ms. Martinez talked a little bit about, as did Mr. Marquette, about trying to improve our opportunities with credit unions. They got left out of the Small Business Lending Fund last cycle, if you will, and I was pretty disappointed about that because, as you've indicated, you also are, like our community banks, very interested in getting this economy back on track and our small businesses up and running, and was concerned about the testimony that, Mr. Marquette also talked about of the 2,000 banks, small credit unions that are doing small business lending, 500, almost 25% are at their cap. Could you guys talk a little bit more about how important it is as frankly, you've seen an influx perhaps of new customers that's raising that small business cap might be, and how it's hopefully, I don't want to take business away from one outfit. I think all boats should rise here at this point in time.
We have seen a significant demand coming in, and we too are about 90% of our cap. So we have to be more selective. We do that through pricing and be more selective in terms of the loans we grant. But we're also trying to expand the communities that we serve, too, and the cap is an impediment. The SBA programs are helpful in that, again, the guaranteed portion of the 7A programs don't count towards a cap. But again, the process that we go through, since we're not a preferred lender, is very time-consuming, so it's very burdensome to us. We have not been as successful as Mr. Martinez in terms of getting expertise that specializes just in SBA loans in our particular area, and that would be very expensive for us to do. So anything that SBA could do to help us streamline that process and maybe have it work a little bit more efficiently, like the 504 program, would be much helpful in terms of our even expanded effort in that program.
Mr. Martinez.
Yes, thank you for the question. We're seeing increased requests for SBA loans. There's two programs that I mentioned: the SBA 504 refi program and the First Mortgage Lien Pooling program. Those two programs are very important to us. The refi program, and both of those sunset in September. Right. The refi program for those businesses that their loan is becoming due and their loan to value is upwards of 90%. The SBA program is really the only product for them. For our credit union, we're having to sell our 504s. We've got the sunset coming up in September for the First Mortgage Lien Pooling program. We're having to sell our 504s to the secondary market just to give us room to create some room in our cap. Unfortunately, it's only going to give us about 6 additional months at the rate that we're going. But those programs allow for a little bit of levers to be pulled, and I think that they're very important. If those programs weren't there, we wouldn't be able to help businesses that are refining, and we would hit our cap sooner if the pooling program goes away.
Thank you, Rick. Can I ask one more question real quick, Mr. Chairman?
Yes, go ahead.
I appreciate that. And Mr. Dixon, you talked about the loan enhancements. Everyone's talked about the value, I think, a little bit of the credit loan guarantees. Sometimes I get feedback from folks back home, some of the lenders back home, that's not as important? I mean, you always want a sound loan. That's the real bottom line. But could you comment real briefly, because I'm over my time, real briefly on how important those loan guarantees are that are expiring, whether it's in the refi program or whatever?
Yeah, let me speak, Congressman, to the 504 refi program. Our experience in just talking with the CBA member banks is that program is continuing to gain momentum. It's been a great tool to help small business in this interest rate environment. It allows them to get access to very attractive capital, and we'd really like to see that program extended. We think it does nothing but gain momentum.
Thank you very much. Thank you, Mr. Chairman.
Mr. Tipton in Colorado. Very well. Let me, since we're going to call a vote soon, and if anybody has any additional questions, I'll come back around. This is a question for all of you. Do you encourage small businesses to apply for an SBA loan because of concerns that banking regulators will question the loan if made conventionally? Would anybody like to respond to that?
I'll comment. When we have a business come in, we sit down and look at them and explain all the loan options. We don't push them into any particular loan. If they can go conventional, that's the best product for them, and we go conventional. And on the SBA program, it's laying it out, not driving them into a specific product because it's better for us.
Congressman, I think we find that we let that decision be made one client at a time as we look at a loan request and decide if any of the SBA programs will make the difference in getting that small business the credit that it needs.
Mr. Chairman, I believe that the best course of action for our clients and our borrowers is to give them financial options. So conventional 7A, 504, making sure we profile the borrower for what their needs are and where they're going with their business. And so we do not steer.
Okay. For additional questions, then, Ms. Hahn of California.
Thank you, Mr. Chairman. Mr. Marquette, in your testimony, you talked about the process that your credit union went through to begin offering SBA loans. And you kind of put it, you said new lenders were feeling like they were on the bottom rung of the SBA priority list. What do you think SBA could and should do to encourage, new lending partners out there in this quest that I think we're all having to provide small businesses with more access to capital?
As I mentioned, we've been having discussion with the SBA Administrator, Karen Mills. She's been very open. The issue is the 7A process. It seems that they're more interested, in our perspective anyway, in the larger loans and larger institutions, larger employers. In our particular area, our niche is the smaller loans, the smaller employers. About two-thirds of our business loans are to employers that have less than 20 people working for them. So that's our particular niche. They could reach out more to smaller institutions. They could ask those smaller institutions, what are the impediments, what are the processes? We can't afford to put an SBA expert on staff. We work very closely with the Community Development Corporation to help us with the 7A program, and even with their assistance, it took us 1 year for the two 7A programs that we did. We do, however, on the 504 program, since we go through the CDCs, they seem to have a better relationship with SBA in terms of processing those loans and have been much more successful in those.
Thank you, Ms. Hahn. Mr. West Florida.
Last question. You brought up a lot of great recommendations that you were discussing. Have you provided any of those recommendations over to the SBA, Mr. Rader?
Yes, we have, Congressman.
And the next thing, when the SBA, I know they have come up with some new practices and new procedures, do they send those out to get maybe a buy-in or comment on from financial institutions first and foremost, or do you kind of get the surprises or not just for birthdays effect?
As I've spoken in my testimony, the agency could do a better job of giving us a better lead time when they do make changes. We have to do a lot of training and investment in education and develop risk controls for these programs. And when we get a new SOP that is announced, for example, on May 25th with an effective date of June 1, it doesn't give us the proper time to train our people to help our customers.
And last question, the preferred lending status, do you find that's an easy status to attain, a little bit difficult? Do you understand how to attain that status across the board?
Yes, we understand how the process works and how the process doesn't work. So yes.
We're a fairly new preferred lender. We started in 2008, and we were actually kind of cautious to go into that preferred lender status, so we could have gotten it earlier than we did and felt comfortable with the process of having SBA continue to look. So I don't think it was burdensome. It was a decision that we made when we were ready for it.
Okay. Mr. Dix.
Congressman, we've been a preferred lender for many years. I find it works well, and that status is, reviewed and renewed each year. But that process works pretty smoothly for us.
As I said, we're just new in the 7A program, and our experience has been less than acceptable. So we're still exploring it, and we'll look into that in the future.
Thank you, Mr. Chairman. I yield back.
Ms. Hahn of California for an additional question.
Right, I just want to follow up on what Congressman West asked Mr. Rader. Would it be possible for you to provide to the members of this subcommittee the list of the SOPs that you are encouraging the SBA to look at, and then maybe we could follow up with the administrator to see where they're at, what's the status, and if there's any thing that we could do to follow up on that?
Absolutely. Wells Fargo can provide that. I would also encourage the chair and committee to check out the NAGLE Association recommendations as well.
Very well. I want to thank all the witnesses for testifying today. For us to get this economy moving, it's going to take small business, and for small business to lift us out and create some jobs, it's going to take access to capital, and you're all integral to that process. So thank you for what you do. Hearing is adjourned.